good afternoon, Mr. Subramaniam. First up, help us understand that what is your outlook coming in on the markets, because this particular week has been really good for the Indian markets. Finally, some respite kicking in. But do you believe it's sustaining over the next couple of weeks as well, or it's going to be volatile?
It's going to be volatile. I think this week, the reason that there's a little bit of an uptick is because I think domestic fund managers who are still sitting on a lot of cash have done some selective buying. FIs have continued to be selling. And the reason domestic funds are buying is because the uncertainty, the tariff is now localized to a certain tariff that's going to come in. So I think just the removal of uncertainty means that you go and pick those which are not going to get affected by the tariff and step in. They are still sitting on a lot of cash, but they would still gradually deploy this. I see FISs continuing to be nervous about the overall emerging market pack, including India. And Mr. Trump also is not helping the cause because he announced the tariff and then now again with Mexico and Canada, he's withdrawing it, he's delaying it. So I think that this uncertainty spooks the market. So I think FIs are not going to rush back into a hurry. And domestic fund managers will do selective stock buying where they have clarity for the earnings. But a real move, I would say, would come in April when you have our earnings season, you have all of these tariff scenarios playing out, and maybe that's when you will get a little bit of stability. Otherwise, it's going to continue to be volatile in the short run.
All right, but Sunil, also help us with your take on some of these sectors that have been once again participating into this rebound. Case in point being some of these defense and railway counters. How do you see this this move? Because we have seen sharper correction in these pockets. So should one take this as an opportunity to maybe move out of these counters, given the fact that they're already been an underperformer? Or do you believe that the valuation comfort is still kicking in and maybe some time to put in some money?
Not yet time to put in money. And in terms of booking profits, see, I'll say that if your holding period has got another year and a half to go, up until then you can book profits in these. Because I see the rally, when it recovers and rallies, quality will lead and not necessarily value-driven stocks. Remember, these were value-driven stocks which rode the momentum flow. Momentum is going to take a long time to come back. Now, if you have a 3-5 year view, defense, railways, part of India's infra story, they will do well. So if you have a longer term holding horizon, no need to do anything with your existing portfolio there. But if you have 1.5 year outlook, then I would say book profits if you've made profits. It depends on when you entered, right? If you had entered at the peak of September, you're probably sitting on losses. So I would say for those, you just make them into longer term investments because there will come a time when these rally. But I don't see that happening in a hurry, right? So that's my view, right? It depends on your holding period on where you take. But definitely, I do not think valuation comfort is still there in this pack yet. There's still some more that they can give up.